Hey friends, I'm back. I have a core stock that I own that has gone on sale. It was my number one position not so long ago. Now it's my number 7 position. It has fallen in share price. I'm buying more shares, but there's a lot more going on in our world than just the challenges per se with this company. But sometimes when we buy a core stock, we think we're getting this. We're getting that big bottle of Pepsi here, and we're getting all of that for our money. But sometimes it actually ends up being like this, the smaller bottle of Pepsi. And if you haven't guessed yet, this video is about PepsiCo. This is the core stock in question. But again, there is a lot going on in our macro economy right now that is affecting things that are beyond PepsiCo's control. I want to share how I am looking at this market, how I'm approaching it as a long-term investor. But first, let's look at PepsiCo. As you can see on the screen in front of you right now, there are the simple metrics. And this stock has fallen 28.5% from its 52-week high. It's now down to $130 and change. My patrons know that I recently purchased more shares at $134.19. And I will include a link in the pinned comment to my Patreon. Now, based on forward EPS estimates, this stock is now trading at a forward 2025 PE of 16 and next year in the 15s. And the starting dividend yield is 4.37%. I highlight that in yellow because it is a really good starting yield for Pepsi. I have right next to it the 10-year Treasury. So the 10-year Treasury right now is at 4.597%, 20-year at 5.118. I want to get into treasuries a bit in this video today because I am evolving how I look at core stocks like Pepsi. They must be compared to the treasury. It's yielding less than the treasury, but I'll get into it in a minute why that's the case. The payout ratio is 71.5%, which is a little higher, but PepsiCo has always been a little bit higher. They've been increasing the dividend per year by 6.83% for the last 5 years on average, but I believe that will slow. Huge market cap at $178 billion. I want to direct your attention to the right-hand side of the screen because I started the video today with a little joke, how the big bottle became the small bottle, and certainly it has. In fact, you can see some of my historical purchases on the right-hand side of the screen, and I bought even back in October of 2024, a while ago at $173, and I'm down on that tranche because it's now at $130. But let's look at some other historical purchases. I bought pretty recently in May of this year, earlier this month, at $134.19. And that being said, I've also bought a lot lower. I started my position back in 2011 at $63.78, and I bought more in December of 2017 at $111. Now, these are not my only purchases of PepsiCo. These are just a few of the purchases out of my wide array of purchases over the years. But I share them to illustrate a point. I have bought in tranches of PepsiCo above the current price, also well below it. And so stocks go up, they go down. I try to buy at the best price I can at any given moment, but our macro economy has changed a bit. It is putting some pressure on PepsiCo. I'm going to get to that in a minute, but I'm buying here and I'm happy that I bought lower. I'm happy that I bought higher. It's the evolution of the long-term dividend investor. I'm also reinvesting dividends on this one as well, which has really helped the dividend snowball. But anyway, it's on sale. The PE is low. The starting yield is high, but things are changing right now in our world, and this is really important. So this is the part of the video. You've probably already seen what I just presented in some of my prior videos, but here, pay attention. This is the exciting part. So check it out on the screen in front of you right now. I have a lot going through my mind these days that I want to share with you. So core stocks, they're on sale. They rarely go on sale. PepsiCo is rarely on sale. Why now in 2025 are we seeing it? Well, the big reason is our changing economy. And so our national debt is finally getting noticed around the US and around the world. We have a big national debt. Our budget deficit, it's big. And yes, there have been efforts by DOGE to cut back on the budget deficit, but it's still there. It's still very real. The tariffs are down from the highs, and they are still, though, a challenge in our economy. And we have high interest rates right now. We have a strained consumer overall. And I want to share actually with you some of the Treasury rates just to illustrate how high the interest rates are right now and how you have to go back quite a bit of time in US history to see similar interest rates. As you can see on the screen, let's start with the 10-year. So the 10-year right now is at 4.597%. And you have to see there's kind of a line, a dotted green line. You have to go all the way back to 2007 to get a similar interest rate on the 10-year. So the 10-year has spiked quite a bit. But it's not only the 10-year, it's all of the bills, the notes, the bonds. The interest rates are up across the board. There was a 20-year auction that I actually participated in today as a non-competitive bidder. You can see on the screen in front of you right now, here's the 20-year Treasury bond. And what's going on with this thing? Well, it's at 5.118%. And again, you have to go back, way back in time to get to these levels in our history. And so what does this mean? What does this mean for our economy right now at these high interest rates? Well, we know we have a huge national debt. Well, we know we have a budget deficit. We know these treasuries are oftentimes maturing, and when they mature, the government has to refinance them. They have to do auctions again, and they have to pay back the debt. They have to do auctions at the prevailing interest rate. Well, it's more difficult just for the government as it is for a consumer like myself. When rates go up, or for a business, it's harder to finance. It's harder to pay the bills because the rates are higher. And so now our government, because the rates are higher and they're issuing treasuries like they did on the 20-year today at these higher rates, well, it's harder for them to service their own debt. And so US is taking notice. The world landscape is taking notice. This isn't only in the US. Japan in their own right now is facing some challenges on their long bonds being sold off and spiking in interest rates right now. And so this is a global thing. It's not just necessarily only in the US, but this is creating some alternatives for income investors. If you look at it in a positive light, I want to compare PepsiCo to the treasuries to understand, should I even be buying PepsiCo, or would I be better placing my capital in the treasuries? I'm doing a bit of both. I view treasuries as a welcome buffer in the portfolio. I do believe the US government will make good on paying them back. And I look at them as a way to lower volatility while earning interest that I can use to pay my bills, that is state tax, local tax free. And it works as a buffering strategy in my own portfolio, but certainly it's a smaller portion of the portfolio. I could never see it really getting above maybe 20-30% of the portfolio over time. And I share those insights over on my Corner Patreon as well. But I want to keep going. I have some thoughts. So this is kind of the landscape. And I'm painting this landscape because we want to, as investors, or at least I want to as an investor, compare anything I'm buying against kind of the treasury rate. But also it helps provide perspective, because what's going on over there at PepsiCo? Let's check it out. As you can see on the screen right now, this is the Q1 earnings. So PepsiCo recently announced Q1 earnings. And what's going on over there? And so what's going on is net revenue was down comparing year over year, and EPS was down year over year. And it was down 10% EPS. That's pretty bad. But on a core constant currency EPS, it was only down 4%. Still bad. And so we have fewer earnings at PepsiCo. We have a slowing revenue growth. But hey, it's just one quarter, right? Maybe they'll rebound in the latter part of the year. Maybe things will get better in the latter part of the year. Well, in that same report, PepsiCo foreshadowed what will happen in 2025. And let's take a look. As you can see on the screen in front of you, right now, we can look at what PepsiCo is anticipating for 2025. And so they provide guidance. And in terms of guidance, they're basically saying for 2025, the company expects low single-digit increase. At least it's an increase, so it's not a decrease. It's increase in organic revenue. But you have to kind of scroll down there more towards kind of mid-bottom of the page, but it says this assumption and the guidance above implies a 3% decline in core EPS in 2025. And it said previously a low single-digit core EPS increase. And so this is not good news. This is obviously not good news for PepsiCo investors. And so not only is PepsiCo stagnating on the top line, they're decreasing on the bottom line. And I'm going to get to it in a minute, but they got some debt. They're going to have to refinance their debt, just like the US government, at higher interest rates, which will further impact their economics and their ability to continue to grow or even pay their dividend. Look, I don't think there will be a dividend cut, but I think the rate of increase will be slower. Now, they're doing some good things. I think no business goes up in a linear fashion. We face business cycles. But PepsiCo, even during this cycle right now, which is pretty difficult for businesses, it is making steps to improve their business. And so they acquired Siete. Siete makes these chips. They make healthier snack foods for consumers. We know the trend is towards health. And so it's really exciting to see Siete come to the forefront. Shout out, by the way, my friend Andy from the Bay Area. He knows all about Siete. Andy, I hope you're doing well, my friend. And also, they're making inroads with healthier beverages. So we have this Poppi here, Poppi soda. This is a healthier option as compared to the sodas that I shared at the beginning of the video. And so Pepsi, hey, they're doing the right things. And oftentimes in a bad economy and bad times, companies can make investments that set them up for the future. But let's not sugarcoat it. Looking forward in 2025 and probably for the foreseeable future, we're kind of stagnating here on the numbers. And so when I look at an investment that's stagnating on the numbers with a starting yield kind of in the mid fours, hey, I'm looking at it really, what am I buying Pepsi here for? I'm buying it for the starting yield. It's going to pay some bills now for that qualified dividend. I'm buying it because I believe in the company. I believe it's going to grow over time and improve over time, but that's going to be backloaded. I don't think that's going to be within the next, say, 2, 3, 4, even 5 years. These next years are going to be rough. Will they maintain the dividend? I believe so. I look at it kind of like a treasury, if you will, but with a forever timeline and some growth tacked onto it. But I want to share that. So I have a few thoughts here. I'm going to be jumping around a bit. There's a lot going on in my mind, but let's take a look at that. In fact, before I do that, I want to talk about just treasuries. So I'm on the topic of treasuries, and now there's a lot of negativity going on out there right now. There's a lot of negativity in the landscape. I'm hearing a lot of things, hey, like this is the end of the U.S., treasury market is broken, no one's buying these bonds anymore. Look, there certainly is some challenge out there, but there was a 20-year bond auction today, and I thought it went pretty well. I thought it went just fine, and I want to share that with you because I participated in this thing, and I bought a tranche of that 20-year bond as a diversification play in the portfolio. My patrons already know this. Again, I'll link in the pinned comment to my Patreon, but I have bonds in the portfolio to help buffer volatility, and certainly at 5% state and local tax-free, that does something for me. It does something for me. It helps me pay bills, and I use the interest to pay bills right now. But as you can see on the screen, let's look at this. So before Treasury auctions, the Treasury Department will publish a report, a Treasury news like you see on the screen. And it shows here, what were they trying to do with the 20-year bond today? What they were trying to do was raise about $16 billion. So you can see their total offering amount, $16 billion. It's the 20-year bond. They show that issuing this thing the issue date will be on June 2nd. But the actual date of the auction was today, May 21st. And so that's the big news. But what were the results of this? The key number on that last screen was just remember 16 billion. Over on X, the world, or previously Twitter, I'm on there. Check me out. It's in my pinned comment below. People would make you think that the US government was going insolvent right now, that no one's participating in the auctions. There's some prominent figures even on X saying this, but look, when I look at the results from this auction, yeah, the rate's higher than what it had been in the past. You have to go back to kind of circa 2007 era for that, but there was a lot of demand for this bond, and I can see why. It's a good interest rate. As you can see on the screen, check it out. Remember, they were trying to raise at this auction $16 billion, but here's the result. Treasury news from today. What happened in this thing? Well, you can see you have tendered and you have accepted. I'm no expert on all of this, but you can see the results of the auction above on the interest rate, the high yield. You can see the price. Long story short, tendered, they had 39.5 $1.388 billion of interest in this auction, but they accepted $16 billion. SOMA, my understanding is that's our Federal Reserve, so they participate in these auctions as well. And you've got kind of the totals there. Total ended up being accepted was the $16 billion, so they met their goal. Because remember on the last screen, they were aiming to raise $16 billion, and they have another $2.19 billion in there from SOMA. And so I think they did just fine. They did just fine on this auction. But again, I'm sharing this because, yeah, the interest rate is high. And yeah, there's problems with the government right now, not only in the US with our economy, macroeconomic things, but look, President Trump, I do believe he's making a good effort here trying to improve things. These aren't problems that just started overnight. We've had this national debt for a long time. We've had a budget deficit for a long time. There's a lot of work that has to happen to improve upon things. And so, needless to say, though, all of this is coming to the forefront in the media right now. And I just wanted to share those slides because that's what gives me a little bit of confidence here in light of a lot of paranoia in the greater landscape. But I want to keep going. I have so much to share. As you can see on the screen in front of you right now, here's kind of my bullet points and how I'm looking at investing right now. So I already shared a slide about why kind of we're facing some macroeconomic headwinds. But core dividend stocks in 2025, how am I looking at these things? How am I looking at PepsiCo? Because I don't really see PepsiCo recovering or improving or growing so much, maybe until, say, 5 years from now or so, let's say half a decade. I'm looking at them like treasuries. I'm really looking at my allocation of capital. Hey, core dividend stock, like Pepsi, I can earn kind of mid-fours on the yields. It's like a treasury, but it has a forever component. Remember, treasuries mature, and when they mature, could I place that same capital into another treasury at the same interest rate? I don't know. Rates might be lower by then. So what's great about core dividend stocks is it locks in the rate forever as long as PepsiCo can keep paying it, and it has some level of built-in dividend growth. It may be slower in the next few years, but it'll probably be something, and over time, it will, perhaps with the acquisitions of Siete Foods and Poppi and other brands over time, the earnings could grow and have a resurgence once again, and dividend growth will follow. And so I'm looking at treasuries, I'm looking at core stocks, and I'm looking at core stocks through that lens, but it has that forever component and a dividend growth component. But how else am I looking at things today? Check it out on the screen. Let's keep going. And so the next one is a new rule, comparison to treasuries. As I buy them in 2025, all core dividend stock purchases, they must be compared to the prevailing treasury rate. The 10 years at 4.597%, the 20 years at 5.118. When I buy stocks, it's no longer just buying stocks to buy stocks because there was no other alternative. Now there are other alternatives. Treasuries are an alternative. I must have that lens. But let's keep going. As you can see on the screen in front of you right now, next thing is just a note on treasuries. It's a viable option for income-oriented investors. I talked about some of these points already, so I'll go quickly, but treasuries could lower portfolio-wide volatility if held through maturity. Only works if the U.S. government can pay back the debt on maturity. They're not subject to local or state taxes, but please, this is not tax advice. Please consult your licensed tax advisor. Now, keep in mind that one other wild card here is Moody's just downgraded the U.S. credit rating. And so that's something else going through my mind right now. But let's look at a high-level summary of PepsiCo. As you can see on the screen right now, what's going on with Pepsi? I already shared a lot of this, but it's a core stock on sale that I'm buying. It's fallen from number 1 to 7. This is why I diversify. It's also an exciting opportunity. I believe even in the worst of times, we all need to eat. They have a bright prospects with Siete and Poppi. I like buying assets that are out of favor. Clearly, Pepsi is out of favor right now, and it's rare to see a core stock on sale. Short-term growth is gone. I'm telling you, the next 5 years, I don't think there's much growth. Also, the debt could be an issue with the balance sheet. I'll look at that in a minute. I'm thankful, though, that it has a high starting yield, and I don't really see a dividend cut ahead for this. But yeah, I actually was just reminded on my slide, I want to share with you the balance sheet. As dividend investors, we have to be cognizant that the companies we own, they're just like the government. They've got debt. And that debt will be refinanced at progressively higher interest rates because the rates are up. And with Pepsi, as you can see on the screen in front of you, here's the balance sheet. I don't know when their debt matures. That's all within their annual report, their quarterly reports. But just at a really high level here, let's look at long-term debt obligations. Well, it's $39.419 billion, up from $37.224 billion in the comparable period, or in the last period they reported, which was 12/28/24. So 3/22/25, they're up to $39.419 billion. Hey, that's not a small amount of debt. And over time, that debt will be refinanced at higher rates. And when it is, it will compress their margins. And the margins that are compressed means less net income coming through, less cash flow, free cash flow coming through, less ability to pay higher dividends. And this is why I think the rate of the dividend increases will be slower for a while, but it's okay. I understand what's happening right here. And thankfully, as an income investor, I'm pretty optimistic. I started the video with that. And one of the reasons I'm optimistic is I don't have to wait for dividend growth anymore. The growth going forward, yeah, it'll be a little slower. But with Pepsi, I don't have to buy it at a 2% yield anymore. I can buy it in the mid 4s. That is a gift. And that's one way I'm looking at it is, yeah, our growth prospects have changed. Yeah, there are some macroeconomic headwinds here, but on the positive side, on the optimistic side, it's easier than ever before as an income investor to buy income right now, whether it's with a stock like Pepsi or with a bond like the 20-year Treasury. But I want to keep going. As you can see on the screen, just a fun slide to end with. This is my allocation. I shared this in March of 2025 on Corner Patreon with my portfolio update. I'll link to that in the pinned comment below, my Corner Patreon. But my portfolio, it is heavily weighted in CPG. SIN stocks, 17.9% of my portfolio, 30+% of my dividends. Even higher now. I have to redo my portfolio. SIN stocks have just surged. They have performed like champs in this market. CPG, 12% of the portfolio, 10.3% of the dividends. CPG food, like Pepsi, stocks like PepsiCo, 11.2% of my portfolio's value, 10.5% of the dividends. I add all this up. With SIN stocks, CPG food, it's 41.1% of my portfolio's value, 51.6% of my dividend cash flow. This doesn't even include the restaurants category, which has a component of CPG. This doesn't even include my ETFs like SCHD, which has a component of CPG. And so what's funny here is my portfolio is very CPG heavy, but I lucked out. Sometimes you just get lucky in life and investing. That's part of the game. And during this crisis, if you will, everyone needs to eat. People want to enjoy the simple pleasures in life. Things like PepsiCo even, I feel confident in buying here because everyone wants to enjoy some snack foods, some beverages in their day-to-day. And yes, the price of these things is high for the average consumer these days, but it is food. We all need to eat. And I take comfort being a CPG heavy investor in this environment. And so, yeah, I went into this year, hey, I'm going to diversify, and I still am. I'm buying SCHD. I bought more of it today. I share my trades on my Patreon. I'll share that in the pinned comment below. But also, I have kind of challenged this assumption, Ian, are you too overweight in CPG? Well, the data has showed me so far that in times like this, when we're in a macroeconomic environment that's difficult, not only in the US, but other countries as well, when we're in this type of environment, hey, CPG is doing just fine. It's paying those dividends. It's doing well. The SIN stocks have performed like absolute champs. They've carried my portfolio, if you will. Not only in portfolio value, but in cash flow. My goodness, are they doing well? Thug life. I love to see it. And that's where I'm at right now as a dividend investor. So I wanted to share all of that with you today. I know this video, it's a little delayed. I have to be inspired to do these videos. I have to kind of have a lot to share. I don't want to do a video. I wait until I have a bunch to share with all of you. If you did enjoy the video, please click the like button. It means the world to me. Also, you can catch me on Blossom Social. I'll link to it in my pinned comment. That is the social media investing platform for investors. It's a great social media platform. In terms of a full disclosure, I am an affiliate of Blossom Social. I'm compensated if you use my link in the pinned comment below to sign up, but it is free to sign up, and you can find me there. You can engage with me there. It is a great community. In terms of full disclosure, I'm long Blossom Social. In terms of full disclosure, I'm also long the stocks mentioned today, PepsiCo, ticker PEP. I'm also long the ETF SCHG. In terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. Please consult your licensed investment advisor before making any investment decisions. I'm not offering tax advice. Please consult your licensed tax advisor before making any tax-related decisions. Also, in terms of a full disclosure, I am long Treasuries. I can't wait to see you all in the comments below. I always read all the comments. I try to respond to most of them. I hope to see you on Blossom Social. Again, my affiliate link will be in the pinned comment below. I'll see you all in the next video.